Welcome to another episode of Delta Investments Deep Dive, where we go in depth and unpack our research on specific stocks and discuss the risks. Today, we are strapping in for a deep dive into Planet Labs. And if you've been following the markets at all, the recent news about this stock has been, well, impossible to ignore.
Absolutely impossible.
We've seen just incredible performance in a very short time. The stock has surged by an astounding 70% in just the past month.
And that level of growth is truly exceptional, especially when you put it in context. I mean, it just blew past the broader market.
Right.
The S&P 500 actually had a slight decline, about 0.4% during that same period. So you're looking at an overperformance of around 60% relative to the index.
Wow.
And it doesn't stop there.
Yeah.
Its returns exceeded the industrial sector, which is tracked by the XLI, by a margin of, 56.2%. It's just an impressive run.
So the big question, and what we're here to figure out, is what is fueling this momentum? Is the underlying business strong enough to really support this soaring valuation?
That's the billion-dollar question, isn't it?
It really is. We've gathered sources that highlight some extremely strong financial fundamentals, some major new strategic partnerships, and what a lot of analysts are calling a potentially insurmountable competitive moat.
Yeah, and you're seeing that reflected in the conversation, heightened discussions online and investment communities positioning PL not just as another space stock, but as a top growth pick for the coming years.
Specifically for 2026. That year keeps coming up.
It does. And in this deep dive, we're going to focus on how all these recent developments, like that record Q3 revenue and the massive increase in their forward-looking contract, how it all aligns with this crucial strategic shift the company is making.
And what shift is that?
It's the shift from simply collecting data to delivering automated intelligence. It's everything for them. But of course, we also have to rigorously address the risks.
Of course.
Things like stock volatility, what goes up can come down, and their dependency on a few very large customers, and of course, the competitive pressures that are always there.
Okay, let's unpack this entire picture. Let's explore exactly why Planet Labs is positioning itself at the absolute heart of this ongoing space revolution.
Mm-hmm.
Let's start with a core thesis here, the thing that might justify this valuation. And this is where it gets really, really interesting.
Mm-hmm.
Planet's most powerful competitive advantage. It isn't actually their sprawling fleet of satellites, which is impressive on its own. It's something else.
It's something much more intangible and, frankly, much more valuable. It's their proprietary data set, specifically their historical archive.
The archive.
Yes. It's not about owning a bucket of pictures taken today. It's about owning a comprehensive decade-plus digital history of the entire planet. That history is the foundation of their moat.
So we should think about their defensibility, not just in the quality of one new satellite image.
No, because that technology is it's rapidly commoditizing. The real measure of their moat is in the sheer scale, the depth, and the continuity of that archive.
And how big are we talking?
Our sources indicate that Planet has successfully recorded over 3,000 images, on average, for every single point on Earth's landmass.
3,000? That's a staggering number to even wrap your head around.
It is. Think about what that means. 3,000 unique historical data points for virtually every square kilometer of land over the last decade. It makes it one of the largest continuous Earth datasets in existence, period.
Okay, but let's be clear about why this is a moat. Couldn't a really well-funded competitor, say a Google or a major defense contractor, just launch a similar fleet tomorrow and start gathering the same data?
They absolutely could. They could launch a mirror image of Planet's fleet tomorrow. But they would still be decades behind. The crucial distinction here is the element of time. The financial cost is immense, sure, but the time required is the truly insurmountable barrier.
You can't buy yesterday's data.
You cannot buy historical data that was never collected. And this gives them a durable, long-term advantage, especially now in the age of AI.
Right, because AI needs training data.
It thrives on it. AI and machine learning models need deep time series data. They don't just need a picture of what is today. They need that sequence of pictures showing how it got there.
So the AI uses those 3,000 data points to learn what's normal for a specific location.
Exactly. It learns the normal operating rhythm, the seasonal changes, the expected growth patterns, the typical human activity for that specific site. Without that historical depth, a competitor's AI model starts with a blank slate. Planet's models are leveraging a decade of global truth.
And that creates a feedback loop, I'd imagine.
A powerful compounding one. A virtuous cycle where the data archive improves the AI, which attracts more customers, which then funds more data collection, making the archive even better.
So the data asset itself is the genuine barrier, not the physical satellite tech.
Yeah.
Which makes Planet look much more like a high-leverage software company than a capital-intensive aerospace manufacturer.
That's the perfect way to frame it, and it fundamentally defines their business model. It's a high-leverage, one-to-many data model. They make the capital investment to capture the data once, their own constellation. They process it, normalize it, and then they license that same data repeatedly, the one-to-many part to multiple diverse customers.
So governments, agriculture, insurance,
all using the same underlying data asset for completely different reasons. And this supports a repeatable and diversified revenue base, but the real power is in the high switching costs.
because it's all subscription-based.
Underpinned by multi-year contracts. Once a major customer, let's say the U.S. Navy or a global insurer, integrates Planet's 3,000 image history into their core analytical workflows, well, migrating away becomes technically and financially just prohibitive.
That archives like digital concrete.
It really is. It locks them in.
Okay, so this brings us to that pivotal transition point you mentioned, AI. Historically, the whole Earth observation industry had this massive bottleneck, right? You could capture all this data, but you needed armies of expensive analysts to make any sense of it.
A huge bottleneck. You had a fire hose of data and a thimble to collect it with. So Planet recognized that just handing over terabytes of imagery wasn't going to cut it long term.
They had to add value on top.
They had to transform the raw data into automated, actionable intelligence. Speed up the customer's time to value from months of analysis to near real-time insights. This is that critical intersection of the space plus AI megatrend.
And the key strategic move here was the acquisition of Bedrock Research in 2025.
That's the one. And this wasn't a CapEx acquisition to buy more hardware. This was a strategic talent and software acquisition to get that essential AI solution layer.
The goal being automation.
Completely. So instead of a bank hiring experts to visually spot when, say, unauthorized deforestation is happening near a property they've financed, the AI automates that detection and instantly flags the change based on historical patterns.
And we also saw the Salo Sciences acquisition in early 2023, which seems like another piece of this intelligence puzzle.
It is, absolutely. Salo Sciences was focused specifically on climate tech, on measuring Earth's ecosystems. That acquisition allowed Planet to develop and package these proprietary planetary variables.
Like their global forest carbon product.
Exactly. It's another move away from selling generic imagery and towards selling high-value, pre-analyzed answers to specific global questions.
So let's get into the mechanics of it. If I'm a defense client or a commodity trader, how does this AI actually use those 3,000 historical images to give me intelligence?
It's a pretty sophisticated process. Step one is identification and baseline establishment. The customer defines an area of interest, a remote factory, a coastline, whatever it is. The system then pulls that decade of archive data for that specific spot.
And it learns the patterns?
Critically, it learns the patterns of behavior. In a northern climate, it knows when the snow melts, when crops are planted, when sea ice retreats. In a military context, it learns the typical traffic volume, the normal infrastructure footprint. It defines normal for that exact location on Earth.
So the AI isn't just flagging any change, it's flagging an anomaly relative to its learned history.
Precisely. And then it moves into active monitoring. So if a new building pops up that violates the baseline, or if the color of a rice paddy changes at the wrong time of year, or if a fleet of aircraft moves to a previously empty tarmac,
The system flags it.
the AI-enabled system analyzes that change and delivers an early intelligence alert. This is how you solve the bottleneck. It's imperative for global monitoring, for strategic planning, for threat anticipation. It turns a static database into a dynamic surveillance and prediction engine.
That makes the shift so clear. The hardware collects the data, the archive builds the moat, and the AI turns that moat into a monetization engine. So we've established the foundation, the competitive moat. Now we need to look at the immediate market catalyst. I mean, this stock has been on a massive sprint, and the sources point directly to those Q3 FY 2026 results.
Absolutely. The recent bullishness, that incredible stock performance, it's tied directly to those figures. They confirm that this transition from spending to profiting is really accelerating.
So what were the headline numbers?
They reported record revenues for Q3 FY 2026, coming in at $81.3 million. And more importantly, this reflected a year-over-year increase of 33%. For a high-leverage subscription business, that kind of growth is exactly what investors want to see.
But as you pointed out earlier, what really seemed to have lit a fire under the stock wasn't just the quarterly revenue, it was the forward visibility metrics.
Exactly. This is the proof that customers are committing to these high-value intelligence products for the long haul. This is the key insight from that earnings report. Large institutional customers, governments, major enterprises are locking into multi-year commitments that validate this entire strategy.
So let's look at those metrics. Let's start with the backlog.
Okay, the backlog, which is the contracted revenue that's been sold but not yet recognized on the income statement, it surged by an extraordinary 216% year over year.
216%.
To reach $734 million. That is a huge amount of future revenue already locked in.
And then there's the RPO, remaining performance obligations. This figure jumped even more dramatically. For anyone listening who isn't deep in enterprise software accounting, what is RPO and why is a 361% jump so monumental?
It's crucial to understand this one. RPO is essentially the total dollar amount of all contractually obligated payments from your customers for future services. Think of it as your guaranteed subscription pipeline.
It's money in the bank, just waiting to be delivered.
That's a good way to put it. So when RPO increases by 361%, totaling $672 million, it means the company has massively increased its contracted, guaranteed future revenue stream. It tells the market, we are not just hunting for new sales every quarter. We already have the business secured from large multi-year deals.
That RPO jump is just staggering. It feels like a fundamental re-rating of the company's financial security. And how does this compare to recent years? Is this a one-off or is it a trend?
It is clearly a sustained, accelerating momentum. If you look back, the trajectory is undeniable. The backlog was around $242 million in FY 2024, then grew to $504 million in FY 2025. RPO went from $133 million in FY 2024 for $413 million in FY 2025.
So this isn't new, it's just getting faster.
Aggressively faster. The fact that these Q3 FY 2026 numbers backlog at $734 million and RPO at $672 million continue this steep climb confirms that the contract momentum is accelerating. It validates the whole model, and management expects to recognize about 70% of that RPO over the next 24 months, which gives them incredible revenue visibility.
And when the financials are this strong and the future is this secure, the analysts take notice. What has the institutional reaction been?
Widespread positive revisions. Clear Street, for instance, maintained their buy rating and, more importantly, raised their price target. Then you had significant new coverage, which always helps. Citi initiated coverage on Planet with a clear buy rating and set a pretty optimistic price target of $19 per share.
$19, and that links directly back to management incentives, which is always a powerful signal.
It creates a fascinating alignment. You have to remember the earnout shares structure from when they went public. These shares vest in tranches tied directly to the stock, hitting certain price targets.
What are the targets?
The tranches are at $15, $7, $17, $19, and $21, and they have to hit them before December 7th, 2026. So the fact that Citi set a target of $19 suggests they see the company breaching that third tier within the next year or so.
It motivates the whole leadership team to execute.
Exactly. Aggressive, successful execution that delivers long-term performance.
So beyond the immediate revenue surge, what about the path to actually being a profitable business? Are they just buying growth, or is it sustainable?
The trajectory clearly points towards sustainable profitability, and that's because of the high-margin one-to-many model we discussed. We can track this using a popular metric in the software world, the Rule of 40 scorecard.
Okay, can you explain the Rule of 40 for us?
Sure. It's a quick metric to evaluate the health of a growing software company. It says your annual revenue growth rate percentage plus your adjusted EBITDA margin percentage should equal or exceed 40%. It's a test of balance.
Growth and profitability.
Right. Hitting 40% means you're both growing fast and highly profitable, the benchmark for an elite business. Now, look at Planet's scorecard. In FY 2025, they were building the foundation at about 6%. FY 2026 is forecast to improve rapidly. They call it the profitability inflection point.
And beyond that?
The target is to be mid-tier in FY 2027, which is when they expect to hit adjusted EBITDA break-even. And then the long-term goal is to reach 40% or higher by FY 2028.
And the numbers back up this inflection story.
Undeniably. Look at the adjusted EBITDA loss. It went from a $55.3 million loss in FY 2024 down to a $10.6 million loss in FY 2025.
That's a huge reduction.
Nearly 80% year over year. It shows accelerating material progress toward that break-even point. The high gross margins and the operating leverage from the AI layer are kicking in. The big investments are now turning into highly profitable service revenues.
Okay, so we have the moat, the accelerating contracts, and a clear path to profitability. Now we need to talk about the physical assets required to maintain this whole system. Planet is positioned right at the core of this new space race, or space revolution. And this isn't a competition won by launching the biggest rocket. It's about having the most versatile and data-rich network in orbit.
That's exactly right. The sustainability of their moat depends on having a multi-sensor constellation. They can't just sell one thing. They're selling diverse insights generated by specialized hardware for different use cases.
Let's get into the assets. What's the workhorse of the fleet?
The foundation, the thing that builds that high-frequency archive, is the SuperDove fleet. These satellites operate at a 3 to 5 meter resolution, and they form the backbone of Planet monitoring. This is what ensures daily image capture of the entire Earth's landmass. It's their global scanner.
Okay, that covers the broad area monitoring. What about when a customer needs to see something in high detail right now for defense or disaster response?
For that, you move to the high-resolution tasking assets. They use SkySat for on-demand imagery. And they're transitioning to Pelican, which is designed for very high resolution, or VHR imaging, plus rapid revisit capabilities.
Rapid revisit, so they can look at the same spot multiple times in a short period.
Exactly. It's crucial for quick reaction tasking. If a hurricane hits or a geopolitical incident flares up, the ability to rapidly retask and get very high detail imagery is invaluable. It's what lets them secure those dual-use contracts.
But they're also pushing into entirely new data types, moving beyond just optical images.
Right, and that's where the real tech differentiation comes in with Tanager. Tanager provides hyperspectral data.
Okay, what is hyperspectral and why is it a big deal?
It's a game changer. A traditional camera sees 3 bands of light red, green, and blue. Hyperspectral data captures information across hundreds of spectral bands.
So instead of 3 colors, it sees hundreds.
Which allows the satellite to see chemical composition and physical state, not just color and shape. Tanager data can identify mineral content in soil, specific types of vegetation, or even the presence of certain chemical compounds like methane leaking from a pipeline.
So that's essential for all those climate and sustainability contracts you mentioned.
Absolutely. The tech demo for Tanager was launched, partly developed via the Carbon Mapper Coalition. This highlights their commitment as a public benefit corporation to turn scientific insight into scalable commercial products.
So the fleet is SuperDove for coverage, Pelican for detail, and Tanager for science. What's next?
Looking ahead, they have OWL, which is slated to be their future 1-meter class next-gen monitoring satellite. So even higher resolution global monitoring on a daily basis, constantly upgrading the quality of that compounding archive.
Now let's zoom out from the satellites to the orbit itself. Why is their use of a polar orbit so critical for global coverage?
The key is the specific 96-degree orbital inclination. A polar orbit takes the satellites over or near the Earth's poles on every pass. And because the Earth is rotating underneath, this specific orbit enables true global coverage. They see everything.
And that's how they get those 3,000 images per point.
That's how. It allows their customers to see the entire world and build those continuous historical patterns of change, whether they're monitoring Arctic ice or deforestation in the Amazon.
It all connects. Now let's connect that technology to the massive contracts that fueled that 361% RPO growth. Who's buying this stuff?
The demand is confirmed by major multi-year contracts, especially in defense and international government security. With the current geopolitical landscape, governments are demanding unbiased, factual, timely reporting from space.
And who are the key customers?
In their portfolio already are the U.S. National Reconnaissance Office, the U.S. Space Force, the Navy, and NATO. And they're running numerous Department of Defense pilots that are laying the foundation for even larger, long-term global monitoring contracts.
And there were 2 very large international deals mentioned that really confirm this global trust.
That's right. The first is a huge commitment from the German federal government, a deal worth about 240 million euros.
And the second?
The second is the SKY Perfect JSAT deal announced in January 2025. This one is transformative. It's valued at $230 million, and Planet won't just provide data. They will build, launch, and operate 10 Pelican satellites specifically for JSAT.
So a customer is funding their fleet expansion.
Exactly. It's not just revenue, it's a strategic capacity expansion funded by a customer, which Planet can then leverage for all their other global clients.
Now, beyond security, their identity as a public benefit corporation drives a lot of revenue in sustainability and climate.
A massive and rapidly growing vertical. We mentioned the Global Forest Carbon Product. They actively monitor forest change, track carbon, and manage climate risks for huge partners like Swisser and AXA Climate. This data is essential for accurate risk modeling and global compliance.
But the real proof of economic power often comes from showing a tangible dollar-for-dollar return on investment.
And that's where the agriculture and compliance vertical gives us a perfect case study. The sources highlighted a specific instance where their data was used to identify fraudulent claims for, I believe it was for paddy crops.
How did satellite imagery prove crop fraud and save $206 million?
The AI layer. Remember, the system has that deep historical archive. It established the pattern of behavior for legitimate paddy fields, planting times, water levels, growth cycles.
And then it looked for anomalies.
Exactly. It could flag fields that claimed subsidies but showed inconsistent activity, or fields that were growing something else entirely. The satellites provided indisputable historical context. This one action, identifying about 865,000 metric tons of fraudulent paddy, resulted in verifiable savings of $206 million.
That's not an anecdote, that's a business case. The ROI is immediate and massive.
And that's what justifies those huge RPO numbers from commercial customers. The synergy is clear. The data moat creates the AI capability, which secures the massive contracts, which drives the exceptional growth.
We've built an extremely bullish case here, driven by tech, contracts, and financial inflection. But a responsible deep dive has to look at the challenges. So what are the inherent structural risks investors need to be aware of?
We have to start with market risk. First, the obvious one. The volatility of a stock that's up 70% in a month and over 400% in a year. Rapid sprints can lead to rapid corrections. And that kind of volatility can also attract stockholder litigation, which is a costly distraction.
And what about macro factors?
Their quarterly results are always susceptible to things they can't control. An economic downturn could see commercial customers cut back. Inflation impacts their hardware costs. And geopolitical tensions, while paradoxically driving some defense demand, also create huge uncertainty in global operations.
You also raised a critical point earlier about concentrated revenue risk.
It's a clear and present risk. For fiscal year 2024, one single customer accounted for 21% of their total revenue.
21% from one customer.
That is significant concentration. If that major government contract, and we can probably guess it's a large U.S. agency, is terminated or even just reduced due to budget cuts or shutdowns, it would have a material impact on their revenue.
And those big government contracts come with their own complexities.
Exactly. They are subject to audits, security clearances, unexpected changes in spec. It creates a concentrated operational burden right alongside the concentrated financial risk.
Okay, now let's talk about the risks of their core operation, keeping a massive satellite fleet in orbit.
Operational failure is a constant, unavoidable risk in this business. You face delayed launches or worse, catastrophic launch failures where you lose the hardware.
And even if the launch goes well,
the satellites might fail to deploy correctly or reach their planned orbit. Any gap in data collection degrades the value of that precious archive. And of course, launch costs themselves can go up, which directly hits their capital efficiency and that path to profitability.
On the competitive front, it's not just private companies. They're also competing with free government data.
We have to address that head on. The U.S. government, with Landsat, and the EU, with Copernicus, provide Earth imagery free of charge. And that poses a competitive challenge, especially for less sophisticated customers who might think good enough and free is fine.
What's Planet's counterargument?
It rests on two things, frequency and the AI layer. Their daily coverage is far more frequent than most government systems, and crucially, their proprietary AI analysis offers differentiation that free data just can't match. But the existence of free, reliable data is a constant pressure point.
And given their global reach offices in Berlin, Haarlem, across Europe, there are international complexities too.
Several layers of risk there. You have foreign currency exchange risk, since a material portion of their revenue is in euros and other currencies. But more critically, for a space company with defense clients, is their dependency on export approvals.
You're talking about regulations like ITAR.
Exactly. The International Traffic in Arms Regulations, or ITAR, and the Export Administration Regulations, ER. These govern their ability to share sensitive tech with foreign partners.
So what are the practical consequences of that?
Geopolitical shifts or sanctions can cause sudden and prolonged delays on necessary approvals. That huge $230 million JSAT deal, it involves building and operating satellites with a foreign partner. Any delay in ITAR approval could cost them millions or even put them in breach of contract. It's a constant, expensive operational overhead.
Finally, let's circle back to their unique legal structure as a public benefit corporation.
Right. A PBC. This isn't just branding, it's a legally binding structure. It mandates that they have to balance three, sometimes conflicting interests.
Which are?
1, stockholder financial interest. 2, the best interests of anyone materially affected by their conduct. And 3, their public benefit purpose, to accelerate humanity toward a more sustainable, secure, and prosperous world.
That sounds noble, but where's the risk in that?
The risk is in the tension between those priorities. The PBC framework can't guarantee they will always achieve their public benefit purpose while also maximizing shareholder value. If management makes a decision that prioritizes short-term profit over their mission, or vice versa, their reputation could be harmed.
Yeah, and their reputation is a huge, intangible asset.
A crucial one. It adds a layer of governance complexity that a traditional corporation just doesn't have to deal with. So, to summarize the investment thesis here, Planet Labs is successfully transforming itself from just an Earth data collector into a highly leveraged, AI-powered intelligence company.
And that transformation is built on that unique, proprietary, and rapidly compounding global data archive. That's the moat. That's the unassailable asset.
Exactly, the time series data. And the recent stock performance, that 417% one-year return, that reflects the market finally recognizing the strategic pivot and the financial inflection point.
Right. The massive increases in backlog and RPO surging 216% and 361%, that's the proof. It confirms that governments and large commercial customers are signing those high-value multi-year deals.
They're validating the shift from data to intelligence. The big investments are finally turning into highly profitable service revenues.
And the financials show that accelerating growth, plus a rapidly shrinking adjusted EBITDA loss, it's a clear trajectory toward hitting those long-term Rule of 40 targets.
Which is why analysts believe the company is poised for significant success. The operational leverage is finally kicking in. It validates the market's expectation that this stock is getting ready to explode in 2026.
The integration of sophisticated AI and advanced sensors is aimed at providing that early intelligence, that prediction, for both defense and sustainability.
And as we conclude, here's a final thought for you to consider. Think about how the increasing global need for monitoring, combined with the continuous growth of Planet's historical dataset, is going to redefine what unbiased, factual, and timely global transparency even means. This continuous growth, driven by AI analysis of the entire planet in near real time, it presents a new reality. If Planet's success is defined by balancing its defense contracts, its commercial ROI, and its public benefit mission, what is the ultimate ethical tension when AI-driven intelligence from space, capable of spotting changes and predicting activity globally, outpaces human analysis on the ground? The speed and scale of this intelligence transformation presents a powerful new reality for accountability and for security.
We hope you enjoyed this deep dive, and thanks for listening. Please subscribe on Spotify, Apple Podcasts, or on whatever platform it is you're listening to us on, and give us a thumbs up. Until next time.